little bit of a glitch, but that's all right. We still got the amazing
You can just bring me on the show.
Peter Bennett here, and he's going
go like this if you can
to
hear
talk
me.
to us about what's going on in the world of finance and all along those lines, because he's a
Mark,
amazing gentleman.
it's all over the place. Welcome to Wall Street Hackers. We were having some technical difficulties. I'm assuming I'm live. Mark was having some glitches, so I'm just going to start the show, and we'll see how much time we have because we may have used 3 minutes on technical glitches. Welcome to Wall Street Hackers, December 5th, 2024. I will move quickly. You can catch a new Wall Street Hackers often on Thursdays at 1 or Saturdays. That said, next week I have a meeting on December 12th, so the next edition will be Thursday, December 17th, starting on Thursdays, depending on the distribution channel. The market report. As Wall Street Hackers has predicted, there are signs the Fed was way too aggressive with their half-point rate cut. I wonder if it was political or not. Who knows? But the market has also very likely been too confident that inflation is under control. Wall Street Hackers continues to point to the two biggest factors, the immediate factors, which are labor and the gigantic government debt and deficits, and believes these are very unresolved issues. Unresolved is a understatement when looking at the national debt of 125 trillion, as opposed to the 36 trillion they've been saying on the news every day and financial analysts talk about. That is so underreporting that debt. So on the labor front this week, I'm going to just allow some quotes of the week to do some of the talking and about what's going on in the market. First, from Wolf Richter. These are all selected quotes from all these articles. Underlying job market dynamics begin to re-tighten Fed backpedaling on pace and depth of rate cuts. Quote, the Fed has already started backpedaling from the pace and depth of the rate cuts envisioned after its monster rate cut, which was triggered by what we now know was a false alarm about the labor market. Voluntary quits spiked by 228,000 in October from September, the biggest jump since May 23 to 3.3 million. That's the highest level of quits since May. Again, I keep pointing out, these numbers that are so often going in the wrong direction when the Fed and the market is basically using wishful thinking. Everything's perfect, except for then you get numbers that go the other way. The second thing is from Barron's Daily, December 2nd, 24. Stock markets and Fed are on a December collision course. The hallmark of November was optimism about how much tax cuts and lighter regulations from President Donald Trump might help companies. That starts with the Federal Reserve. It was a huge relief that the central bank started lowering rates, unless you don't believe it. But it's already getting to the point where every decision is a tough call, and there's chance rates don't have much further to fall. The unemployment rate is still at a historical low. On top of that, inflation is still well above the Fed's target, and they're not even talking about possibility of it going higher. This is from Mott Capital, and it talks about the market in general and why I'm more defensive than usual. But we'll get into what to do in that section. The S&P 500 is historically expensive, ranking the top 1, 2, and 3 in historic price to earnings, price to sales, price to book, and dividend metrics. That's 4 things, I think. And he only said 1, 2, 3, so who knows? And dividend yield metrics over the last 60 years. So we're talking about one of the most overpriced markets on any of these statistics. The dividend yield of 1.23% is the lowest second lowest since 1970, suggesting the market is in a late cycle, potentially signaling a bubble. So here's the thing. The Trump administration will be doing many positive things for the economy, without a doubt. I mean, you're talking about cutting gigantic amounts of waste, cutting regulations, and very likely using tariffs in a very strategic manner, and probably with positive effects, I would expect. But that said, the Trump administration is inheriting a country that is in a real fiscal mess. I mean, this $125 trillion took decades and decades to pile up. And that, of course, counts Social Security and Medicare unfunded liabilities, which are becoming more and more of a burden. Even the interest alone is starting to eat up the budget, and that is non-discretionary. So there's a lot of inflexibility that they're inheriting. And I always point out, and I have an added feature to this, if you look at 125 trillion, which is my estimate, is based on Comptroller General David Walker, who is on Economics Monday's estimate that it's 125 trillion. Some people, if you look at the debt clock, it says over 200 trillion, but that's an ad infinitum number. And I think his 75-year estimate is much more realistic and also easier to deal with. So my point is, though, if you take the entire U.S. stock market, the entire U.S. bond market, the all privately held real estate, and I just figured out I could also add in all commercial real estate, basically everything, that is still under 125 trillion. That is a number that will not be easy to deal with. So the bottom line is, even with smart leadership, and it is much smarter and business savvy than the prior administration, there's going to be a lot of challenges, not to mention the rest of the world. It's not just the United States. I mean, even if the United States were perfect, the rest of the world is going to have very similar issues, because in Europe and Asia and South America, we have free healthcare for aging demographics. We have underfunded pensions, and we're in a world of international trade now, and that would affect things. But so what to do? As always, we'll always go with income generating dividend stocks and dividend growth stocks. Our over 100-year studies show that they outperform the other stock market over time by 2 to 3 times. That's a huge outperformance. We love REITs, which historically have outperformed, but very selected, of course, outperformed the stock market. Energy stocks, which outperform the stock market, and very selected REITs. MLPs. Basically, right now, I'm down to MPLX, which I still like, but I'm not. My allocation was really huge before, but now it's maybe, I don't know, 12%, because now it's starting to get priced fairly, but it still looks to me like a safe investment compared to just about any other stock or MLP in the market. So no one can say how to play these markets, and that's the point too. I mean, anybody says this is what you should do, forget it, because nobody knows. These are uncertain times. We've never had budgets like this, and we're in, this is part of being in a period of rapid change. You have AI coming on, which could really displace a lot of jobs, unfortunately, and which is deflationary and good for the market, and that'll be a headwind. I think that the bottom line is, my guess is very strongly, governments around the world will be pushing interest rates down to zero, either because of recessionary factors, like AI taking jobs, or just stress of inflation. So the bottom line there is, I think interest rates are going down, and if they aren't going down, we're in Zimbabwe, in which case you better own real estate. I'll cover that a little more in the bonds, in my investments, because I have 2 investment picks this week, one really defensive, one very speculative. In any case, I think the most likely scenario is governments use yield curve control to bring rates down, and in a few more years, we're heading for zero, and that will be, with inflation higher and the stock market probably moving up, probably stagflationary environment, and certainly there's going to be battles with inflation. So 4 most interesting stories of the week. Number 1, everyone has heard that President Biden pardoned Hunter Biden. And, I think everybody in the country just about knows that, unless you don't turn on the news. But what they missed is one thing, and of course, 2 things, one point and one thing. So in terms of what they what it shows is the mainstream media once again has egg on its face. I cannot understand how people watch MSNBC, CNN, or believe the New York Times, or on and on, ABC, NBC. They just report what they want you to believe rather than the truth. Yes, Trump was a Russian spy or a surrogate. Yes, COVID from Wuhan was a conspiracy. ... Story after story, year after year. Biden will never pardon Hunter. Can never happen. Trump is a Nazi and a dictator. I do not understand why people can believe this, but they do. But here's the part that's very interesting. I happened to catch this on Newsmax. I was just scanning the channels, and I heard one story, but this should be reported a lot more. So Biden pardoned Hunter, but what almost everybody missed is that by doing this, he has now received immunity and he's lost his Fifth Amendment rights. So against self-incrimination, which means, I believe, and I heard, and it's pretty certain, that Hunter now can be called before Congress, and he will have to start explaining the $20 million plus that the Biden family has received over the years that he was granted immunity from 2014. So why did he get the family get maybe $5 million from Ukraine, money from China? Why did Russia get somebody from Moscow give them $3 million? These are questions that he will not enjoy answering. And they could also get Joe Biden as well as Jim Biden, his brother, into hot water. So this is not over yet. That's my guess. Interesting story number 2, talking about crazy news, the worst of the worst, MSNBC. MSNBC employees are reeling from last week's announcement that the network would be spun off next year by parent Comcast. Basically, they're giving up their other channels too, with a top executive even suggesting MSNBC may be forced to change its name. The surprise spinoff news and plummeting rating prompted, the MSNBC ratings have been in free fall since election day. The surprise spinoff news and plummeting ratings prompted Joe Scarborough, co-host of the Net's Morning Joe, to joke nervously on air, quote, "We could all be fired a year from now." Well, Joe, maybe the reason that you'll be fired is because I would personally rely on the reality of World Wrestling Association a lot more than what you call news. Next story. So interesting story number 3, to go the other way, by the way. The Trump administration is correct on maybe 90%, maybe more of the issues, but there are definitely things I think they're dead wrong on, and I'm going to try to alert to them to that if I possibly can. But the Biden administration was right maybe 10% of the issues, and even on the 10% they were right, they probably executed well on close to 0. It's amazing how even the ones they were right on, they messed up. But one of the areas the Trump administration is likely missing the boat on is crypto and Bitcoin. And this week's discussion will be all about the issues relating to crypto. Most interesting story of the 4. I've hardly ever repeated interesting story of the week when I do 4 or 5. But this one, I just loved it. I'm a Lord of the Ring fan, and so many people are. So I'm going to bring this story back for 1 week. A literary and historical study that Lord of the Rings fans will appreciate. In 1785, a farmer stumbled on a gold ring which had the inscription Senesianis on it. That's Senesianis, if you want to look it up. It also had both pagan and Christian symbols, which are extremely rarely ever found together. The ring was sold to a collector, and the ring was then studied for 143 years. In 1928, an English history professor, you guessed it, named Tolkien, was part of a group that was studying a recently discovered tablet that was inscribed in Latin. The message described on the Latin tablet said that there was a theft of a gold ring and said the thief had the name Senesianis. Analysis of the tablet showed it was created around the 4th century AD. I think this sounds familiar somewhere. So I conclude with, I only wish I could find the other 6 rings. Okay, on to investments of the week. We're doing okay on time. We may have lost 3 minutes. Okay. So we have 2 investments of the week. First, disclaimers. Wall Street Hackers is for entertainment only. there's no guarantees on any of our suggestions, and there's no guarantees on anything, except for maybe you can buy a T-bill or a T-bond, but you have to hold it to maturity or you can lose principal. These are only our opinions. Consult your financial advisor. So this week, for a change, I'm giving two investments, and they're very diverse. First, the very defensive one, or at least to a point. So I like still long-term treasuries. I like them at 4.7. I like them at 4.8. I like them at 4.4 and 4.5. They're state tax-free for American investors. And I like it. I think everybody says you should have some portfolio in fixed. And so I go for high coupons and long-term because just in case inflation kicks up, at least I get the cash flow to reinvest in other places. So, but if I'm right about world governments in the United States pushing down interest rates using yield curve control, which they're going to try this, they have to try this. As a matter of fact, it's in my report, among other things, that I cover why they need to do this as soon as possible. So there's only two possibilities, basically, when they're printing more money than you can imagine, more money than, as I said, the stock market, the bond market, and all that. They're going to be printing money. There's no way they can tax that. It doesn't exist. So they're going to be pushing interest rates down as best they can, and it'll either go astronomical because they can't do it, or they'll do it, and they probably will. It succeeded in World War II, and other countries have done it before. So if they succeed, rates are going very low, and that cash flow will be nice. If they don't succeed, then you're going to want to be in real assets. So I like owning a bit of both, because if there's massive inflation, then it's real assets you want to own: real estate, shopping center REITs, probably oil companies, and you also want to be generally defensive. So the fixed income allocation is totally personal, obviously, to everybody. Some people I want to go 100% equity, especially if you're young. The classic traditional recommendation is 60 equity, 40 bonds, which studies have shown perform almost as well as 100% equity. There's also the formula 100 minus your age and fixed income. So which is a defensive kind of posture. So it's all based on personal factors. Now the other side, this is one of the most speculative things I've ever suggested. When I say speculative, that means you have to be prepared to lose everything or a lot you put into it. I only have 0.5% allocation to this, and I may pull out before the options expire, or I may turn it into another short. But what I did is, initially I shorted Western Union, and then I decided to just short options to limit my risk. So I sold for just 0.5%, so I can only lose 0.5%, the May 11 and May 9 puts. And the reason I didn't, and by the way, I didn't like the short initially because it pays an 8% dividend. I didn't want to pay the 2% in about 2 weeks, but I may turn it back into a short at some point after the dividend pays. But here are the three reasons I don't like Western Union at all. And I'm usually, I don't short much. Last one I did was Abercrombie and Fitch. My only mistake was, Aris Pastel, and I should have stayed with it. I did well with it, but I didn't ride it to the bottom. Anyway, here are the reasons why I'm very skeptical of Western Union's business model. Number one, they have had declining revenues and declining numbers for years. They've been on a straight path down. I just looked at their 5-year chart. It's basically been going straight down in a straight line. But that said, obviously the options account for that. But here's the other threats that are major. One, it turns out crypto is less expensive and easier to send international remissions than the Western Union, which alone could crush them if crypto stays around, and it very well may. And the other thing is the Trump administration is going to likely, if they're smart, tax international remissions or put other limits on it, or even ban it, which I don't think they'll go all the way, but that would crush potentially their business model too. I've looked at the statistics. A good part of their business is U.S. transmissions to South America and Mexico. So there's a lot of downside potential for Western Union, but it's something I'll be watching very closely to see. And, maybe I'll pull out, maybe I won't. I won't promise anything there. But if you want a spec play, that would be one that I like. So panel discussion of the week, we'll bring Mark on. And the issue does relate to crypto. So the question is, should the U.S. issue a national digital currency, and the issues with crypto? Background. I hope Mark will be here. If not, I'll do the panel discussion with myself. So the background. These are selected quotes from Chapter 10 of my report on the U.S. fiscal crisis. I just did this, and I think it's pretty comprehensive, and I hope it'll be appreciated when people read it. I'm going to be sending it to dealing with some people in government and politicians and things, and we'll see. So here's some selected quotes from that report. The U.S. should develop a U.S. central bank-backed currency as soon as possible. Several countries, including China, have already issued digital currencies, and many other countries are already developing their own digital currencies. The advantage of creating a U.S. digital currency include an early-to-market advantage. U.S. purchasers will be parking in U.S. digital systems. Foreign purchasers will be moving funds into the U.S. And also, basically, it will, I believe it will use much less energy than crypto, which is a huge energy absorber, and basically divert some funds from crypto. In addition, as I said, a national digital currency would compete with privately created crypto. So here's the thing about crypto. Number one, as of March 24, there were 13,217 cryptos, and there were 8,925 active cryptos. In other words, people decided, I'll just create a crypto, and people put money into it. Over 8,000. Cryptos have no physical or financial intrinsic value. They're very volatile, and even some of the well-known cryptos have been cited as among the most volatile assets. So there's only a few ways crypto can go, up, down, or sideways. If the value of the crypto market goes up, it creates a wealth effect, increasing consumer demand and inflation. If the value of in other words, some people are going to get very rich and spend a lot of money, and other people won't be, they'll be shut out. If the value of crypto goes down, it will hurt or devastate many financial investors and potentially leave them dependent on government and a lot poorer. By the way, I will throw in, I've been saying for a long time, crypto could go to $1 million or zero. It's total speculation. Since crypto is both privately created and volatile, it takes control of the money supply out of the hands of the federal government. I mean, we talk about the Fed will loosen the money supply, tighten money supply. Now you're having private crypto people creating money, basically. And if it goes up, it's basically increasing the wealth and the money supply. As I mentioned, crypto mining also consumes extremely large amounts of energy. I think it was Mongolia that was using 2.5% of its energy on crypto, and then they banned it. Crypto tax evasion, as we know, is likely to be very expensive and expensive to police. And there are also various known concerns about the use in criminal enterprises. Everybody knows that one. Here's an additional thing, though, that is interesting why the Trump administration may turn their eyes towards more negativity on crypto. Additionally, crypto could significantly hamper possible efforts to control or tax international remissions, back to the Western Union, from illegal aliens, as it is beginning to disrupt or even replace the traditional remittance process because of both the ease of use and less expense. This is where I say, Mark, what do you think? But unusually, Wall Street Hackers is having some technical difficulties today. So I don't know what to say, basically, on the panel discussion. But I would say that, look who's here.
I didn't know about the panel discussion. We can do panel discussion.
We have a panel. Look at that, Nick. Hey, Nick. That's from Europe, right? Or
no, this is actually Washington, D.C.
Oh, you're in Washington.
Lies.
Oh, okay. So we have about 3 minutes. What do you think of, did you hear my crypto analysis?
Yeah, I did. And the thing is, I saw it went up, and I do know a lot of the investors, they actually do invest in crypto. I'm not one of them. I'm not a believer. So, that doesn't mean that people can make a lot of money in the next couple of years in crypto, but as a long-term investment, my answer would be no. And if I'm not for long-term, I'm not for the short-term. So forget it.
Well, yeah, but I say, listen, it could go to $1 million. Tulips in Holland went up through the roof. Beanie Babies went through the roof. Unfortunately, in the end, it crashed. So probably it'll keep. I wouldn't be surprised if it keeps going up. Maybe it'll stay up, but at some point it'll get so high that, and then what'll happen is people are going to say, "Wait a minute, it's so high, and now it's starting to go down." Then the panic sets in. That's happened historically, but I'm not even looking at it as an investment. I'm looking at it from the perspective: should it be allowed? Is the cat out of the bag? In other words, you have Elon Musk, who's a genius in so many ways, but he seems to be touting it, and the Trump administration seems to be putting in a SEC chairman who's more favorable to it. And I would say that is not the way to go in terms of looking at the effects on the economy, because my concern for the United States is the fact that we owe 125 trillion, and we better starting to get control of the money supply, and that's not helping.
Yeah. Well, the thing is, I believe in pipelines now that Trump's in office.
Oh, yeah. It's a big plus for MPLX. I mean, that's my biggest equity investment by far. And I like it for a lot of reasons, more than some of the others, because I do have concerns about natural gas liquids going to Europe. And I actually talked to their investor relations, and I found out it was a pretty small part, NGLs going down to the Gulf, because there was going to be issues there, but I don't have much time to discuss it. But yeah, that's still a favorite of mine for sure. I've been recommending that for years. In any case, we are out of time, and thanks for filling in for Mark, because he had some technical glitches today.
I saw that on the wire, so
all right,
I jumped in. Yeah.
All right, very good. Thanks for filling in, and we'll and so I will be back in 2 weeks. And not next week because I have a business meeting.
2 weeks. All right. We'll see everybody then.
Okay. Bye-bye, everybody. As Kim says, get home.